Hello there and welcome to your IMTV News Update. Coming up today, Mosaic buys CF Industries phosphate arm for $1.2 billion. Rio Tinto temporarily suspends ilmenite operations in Madagascar. And RHI technical problems in Norway bring down third quarter results. First today, Mosaic Company is to buy the phosphate business of fellow US fertilizer company CF Industries for $1.2 billion. Mosaic, which is now the world's biggest producer of finished phosphate products, will acquire CF's South Pasture phosphate mine and plant, a phosphate manufacturing plant and ammonia terminal, plus warehouse facilities, all of which are located in Florida in the US. Mosaic also announced in November that its third quarter earnings plunged 70% to $124 million, down from $417 million in 2012 due to lower potash and phosphate prices. The average selling price for diammonium phosphate FOB plant was $436 per tonne, down from $533 the previous year. Rio Tinto has temporarily suspended its ilmenite mining operations in Madagascar due to high global stockpiles. David Outhwaite, Rio Tinto's principal advisor, said the 2-month suspension of the QMM mine will enable it to work through inventory on site. The decision was made in response to the current market conditions in the global TiO2 feedstock industry. Rio Tinto has also planned to rebuild some furnaces in its Feu-et-Titon plants in Canada. However, TiO2 production is still continuing, with a number of Canadian mines in full activity. Next today, technical problems at RHI's Norwegian fused magnesia plant cost the company roughly €12 million in the third quarter of this year. That's contributed to an 18% drop in operating results to €32 million. The company says raw materials plants were faced with weak capacity utilisation due to the low level of finished products sold. Revenue in the raw materials division was €66.3 million in the third quarter, lower than the second quarter of this year, but up from the same period last year. But not all is well in this division. Scheduled maintenance work on the Irish location Drogheda led to less production of sintered magnesia compared with the previous quarter. In Porsgrunn, Norway, problems with the pneumatic conveying of coarser material to the fusion plant led to another delay in the start-up phase. The company says a team of experts are currently working on fixing the problems, and it expects they'll have a financial impact on next year's results. And finally today, the World Trade Organization has ruled China's export restrictions on rare earths are incompatible with its international trading rules. It comes 19 months after Japan, the US and the EU first brought the case against China, following its decision to limit the amount of rare earths it makes available to the international market. Its conclusion hasn't come as a surprise to the international community. According to a policy analyst at China's Ministry of Commerce, the country is expected to appeal. China has been reducing exports for the past decade, claiming the measures were necessary to help limit industry pollution. A sharp cut in quota allocation in the second half of 2010 spooked global consumers and caused prices to rocket in 2011 following supply concerns and panic buying. Now, before we go, don't forget to sign up for IM's Moving Minerals Roundtable in Amsterdam on the 3rd of December. The event will cover everything from global trends in dry bulk shipping to the impact of logistics costs on delivered mineral prices. You can download the full programme and see how to register by visiting www.indmin.com/MM2013. That's all for now, but thanks for watching and I'll see you again soon.